Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 23rd of November to the 27th of November 2020. Just before we jump into this week's forecast, I just want to give you an overview of what's coming on December the 7th. This is the free course that we are going to be launching, which is going to be accessible to every single one of you. You can see, even though it's free, it's going to be a very big course. This is a big content release. You can give or take some of the modules because we will be adding some extra bits and also maybe compacting some of them as well before December the 7th. So the module numbers may change slightly, but you can see there's going to be a lot of information in here for you, from overall market structure to the business cycle to key macroeconomic objectives, so GDP, inflation, trade, unemployment. We're also going to be looking at monetary and fiscal policy actions and how these relate to not only the key macroeconomic objectives of inflation, GDP, trade and unemployment, but how they also relate to the market and act as fundamental drivers across lots of different assets, so stocks, currencies, bonds, commodities. We're also going to be looking in the course at economic indicators, as well as the stock market, so you can see from module 28 onwards, including how to assess the financial statements of companies to create a fundamental bias either to the long side or the short side on an individual stock. We're also going to have technical analysis in there, so you'll be able to learn how to time your entries into the market once you have your macro ideas. And we're also going to be covering in detail risk management principles to make sure that you can stay in the game and you can apply your process sensibly and over the long term. So all of this is coming on December the 7th. Just a reminder that we are changing the name of the channel this Monday. For those of you who are interested in accessing this free course when it comes out, be sure to subscribe to the channel before Monday so that when the name changes, you'll be able to find us easily in your subscriptions list. So with that said, guys, let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we started the week in this area and we were looking for further declines to the downside in the dollar index. We did have a bearish bias on the dollar index last week. We did start to move to the downside, but for anybody trading last week, it was a little bit like watching paint dry. It was a bit of a boring week. We didn't have a huge amount of volatility in the markets. However, we are still coming down, looking to make new lows in the dollar index. And so going into this week, we do still hold a bearish bias on the dollar. And this means we're going to be prioritizing dollar shorts this week as the market corrects somewhat. We're going to be looking for further declines in the dollar index down towards the next key of support to the downside, the target set at the 91.79. And therefore, we're going to go into this week, as I said, with a bearish bias on the dollar, and we're going to be prioritizing dollar short positions in this upcoming week. The next market we're going to look at is crude oil. Now, last week we started the week in this area and we were looking for further advances to the upside in this market. We did actually get advances to the upside, but they were very capped. The market hardly went anywhere. It was something which, as I said, was reflected in last week as a whole, where we had very low volatility across a lot of assets last week. As a result, we are moving to the upside, but we're starting to really fail to break above the highs here with no momentum. So what we would like to see going into next week, especially as we're starting to lack a bit of momentum and we are quite close to the target, is any correction in this area is going to reset this chart somewhat, and it's going to provide us with the opportunity to start to look for bullish breakouts in this market. And we are once again going to be looking at initiating longs up towards the next key resistance, the upside, the target set at 43.70. The next market we're going to look at is euro dollar. Now, last week we started the week in this area. We had pulled back, and we noted in last week's video we were looking for further advances to the upside in this market. We did again have advances to the upside, but again they were capped. Going into this week then, very simply put, any correction back down towards, although we do not expect it to come all the way back down to the 1.16530 if it is going to rally, but any correction towards this key area of previously broken resistance turning support is going to be an opportunity next week to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 1.2054. The next market we're going to look at is pound dollar. Now, last week we did correct and we started the week down in this area, and we're looking for a rally in this market as well. We did have a move and we came quite close to the 1.33550, but we didn't take out this target, and that was again due to the lack of volatility last week. For anybody not involved in pound dollar, any correction back down towards the 1.29430 is going to be another opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 1.3355. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside, and target 2 at the 1.3478. The next market we're going to look at is US dollar Japanese yen. Now, last week we started the week in this area and we highlighted the 103.730 as an area to look for a pullback towards. You can see we came down and tested this level and we held it almost to the pip last week. This is now an opportunity if you are looking to go long in this market where you could start to look for bullish setups. And we would be technically here looking at initiating longs up towards the next key of resistance, the upside and the target set of the 105.78. Now, any long positions in US dollar yen is going to be going long the US dollar and short the Japanese yen. And as we highlighted at the beginning of this video, we do go into next week with a bearish bias on the dollar, so we would be going long a weak dollar. So really, you can either filter this out completely, or you could use this as part of a synthetic hedging plan, for example, as we discussed in previous videos, and we'll be discussing in more detail in the course, where perhaps you go long on the US dollar yen with a 2-to-1 risk to reward ratio, and at the same time you go long euro dollar with a 2-to-1 risk to reward ratio, and therefore any move either to the upside or the downside in the US dollar has a greater chance of returning at least 1x, because you get stopped out on one for a loss of 1x and you make 2x return on the other one. So just something to think about. If you are bearish the dollar next week, then you can just filter this out altogether. The next market we're going to look at is Aussie dollar. Now, last week we started the week in this area and we finished the week here, so you can see a real lack of volatility. We pretty much went nowhere last week in this market. Very simply put, therefore, any correction in this market is going to once again be viewed as an opportunity to look for bullish setups, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.7393. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 0.7475. The next market we're going to look at is New Zealand dollar. Now, last week we started the week right here and we were looking for a rally into the 0.69380 last week, which was right here. And you can see that was pretty much the whole move for last week. We turned almost to the pip at the 0.69380 and we started to sell off. Very simply put, going into this week, we are looking for further advances in this market once again. Because we're coming quite close to the targets now, we would like to see a pullback in this market first to give us much better risk to reward setups to the next key of resistance. But any correction in this area is going to be viewed once again next week as an opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.6977. The next market we're going to look at is US dollar Swiss franc. Now, in previous videos, we did highlight the 0.91720 as an area to start to look for a reversal to the downside in this market. We have bounced from here, but last week we pretty much went nowhere with a low volatility week. For anybody not already short in this market, any correction once again back towards the 0.91720 is going to be another opportunity to start to look for bearish setups and bearish breakouts in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 0.8984. The next market we're going to look at is US dollar CAD. Very similar to the other currency pairs, we started the week in this area right here, and we pretty much closed where we opened. So the market barely moved last week. So any correction in this market towards the 1.32790 is going to be viewed as an opportunity once again to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.2801. Now, there is quite a distance between where we sit currently and the next key of support. So if you want a more conservative target for going into next week, you can look at the previous low down here, which is roughly at the 1.2940. And last but not least, we have gold. Now, we are technically structured to the downside in this market after that sell-off on the vaccine news. We would therefore favour short positions in this market if we're putting the odds on our side in the long term. The problem you can see is any short positions in gold is going long the dollar. And the dollar is quite weak going into next week. We do have an overall bearish bias on the dollar. So we can use this market in the same way as the US dollar Japanese yen. Either we can filter this out completely, or you could use this as part of a synthetic hedge play. If you are doing that, what we'd like to see is any correction back towards the 193606 is going to be viewed as an opportunity to start to look for bearish breakouts in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside of target set at 181522. So this is, don't forget, if you want to play this alongside dollar short positions, but you can also just filter this out altogether if you want to focus on dollar weak positions only next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. Don't forget, we are changing the name of the channel on Monday, so if you want to be able to find us easily afterwards, make sure you subscribe to the channel before then. And in doing so, guarantee you have access to this free course when we launch it on December the 7th. So I want to wish you all a fantastic weekend and all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.